A very good afternoon, investors. You're now on KleverStock with me, Wan Izul, and I will be serving you the midday roundup for this morning. Now, we've got all the latest market updates from this morning up until now. We kick it off with Bursa Malaysia update. So, first of all, Bursa Malaysia, they opened the trading week with a strong rebound as the benchmark FBM KLCI erased the previous week's losses to regain key psychological footing. Tracking a late session recovery on Wall Street, the local index surged by 11.91 points to open at 1,746.41 as global fears regarding the disruptive impact of AI on the technology sector began to ease. Now, despite the positive start, local analysts remain cautious. TA Securities noted that while the headline numbers are encouraging, momentum indicators had deteriorated during the recent correction, which could trigger near-term volatility. Now, the research firm observed that bargain hunters remain hesitant to commit meaningfully in the absence of domestic positive catalysts. Now, the AI productivity paradox that plagued markets last week, where investors worried that rapid AI advancements might cannibalize existing software models, saw a reprieve after US markets stabilized on Friday. However, TA Securities warned that the prevailing cautious trading mood will linger for another week before more sustained bargain hunting stabilizes the index. The research firm added that externally, persistent concerns over stretched AI valuations and infrastructure spending that continues to outpace actual earnings are expected to weigh on sentiment in the near term. Heavyweight blue chips spearheaded the recovery on Monday morning. IHH Healthcare jumped by 16 cents to 8 ringgit 96 cents, closely approaching RHB Research's recently upgraded target price of 9 ringgit 52 cents. Tenaga Nasional, or TNB, rose by 14 cents to 14 ringgit 8 cents, and that's supported by a consensus analyst target of approximately 15 ringgit 89 cents, following recent regulatory approvals. Other significant gainers included Press Metal, which gained by 10 cents to 7 ringgit 59 cents, and YTL Power added 8 cents to 3 ringgit 15 cents. In the broader market, AI-themed counters like Zetrix AI mirrored the global sentiment shift, gaining by 4 cents to 72.5 cents. Meanwhile, Ambest Group, which made its debut last week Friday, continued its upward trajectory, trading at 35.5 cents as it remained a top favorite among retail participants. Now, analysts expect the market to remain range-bound between 1,730 and 1,760 as investors wait for more concrete domestic earnings catalysts. Moving on to our local currency and foreign exchange, the Malaysian ringgit opened on a neutral footing against the US dollar this morning as a wave of significant political developments across Asia and easing geopolitical tensions in the Middle East created a balanced environment for our ringgit. Now, at 8 a.m. this morning, the ringgit stood nearly unchanged at 3.9430 or 3.9560 against the US dollar. And that's compared to Friday's close of 3.9440 or 3.9525. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzanizam Abdul Rashid expects the pair to maintain a range of 3 ringgit 93 cents and 3 ringgit 95 cents for today. A primary driver for the morning's currency moves was Sunday's landslide election victory in Japan. Prime Minister Sane Takaichi, often referred to as Japan's Iron Lady, secured a two-thirds super majority for her Liberal Democratic Party, LDP. Now, this mandate allows Takaichi to proceed with aggressive economic stimulus and reflationary policies, which has led to a weaker Japanese yen and by extension a firmer US dollar index. Now, Dr. Afzanizam remarked that in some sense there is a bit of optimism in the market. However, the weaker yen has contributed to a firmer US dollar index. Now, sentiment was further bolstered by the Thailand general election results, where the Bumjaitai party emerged with a comfortable margin. Markets view this as a sign of continued political and economic stability in the neighboring kingdom. Simultaneously, the global energy market saw a sigh of relief as tensions between the US and Iran cooled. Following diplomatic discussions in Muscat, Oman on Friday, both nations signaled a good start toward resolving nuclear disagreements. Consequently, benchmark Brent crude prices declined over 1% to $67.16 per barrel, easing the immediate inflationary safety bid on the dollar, but capping gains for commodity-linked currencies. Now, the ringgit's performance was mixed across major currencies, strengthening against the Japanese yen to 2.5075 or 2.5161, but weakening versus the British pound to 5.3664 or 5.3841. Now, against ASEAN peers, the local note was mostly lower, easing slightly against the Singapore dollar and the Thai baht. Now, despite the broader DXY strength, analysts remain optimistic about merging or emerging market currencies, noting that an improvement in market uncertainty should keep the ringgit on a generally positive note, as domestic macroeconomic fundamentals remain firm. Now for some local economic news. Malaysia and India, they've entered a new era of high-tech economic integration following the historic two-day visit of Indian Prime Minister Narendra Modi. Now, Prime Minister Datuk Seri Anwar Ibrahim announced that both nations have agreed to move beyond traditional buyer-seller relationships, now to focus on high-stakes sectors, specifically semiconductors, digital trade, and local currency settlements. A centerpiece of the visit was the formalization of the Malaysia-India Digital Council, MIDC. Now, this strategic body will serve as the primary platform to drive collaborative projects in AI, cybersecurity, and fintech. Datuk Seri Anwar stated that we also welcome the establishment of the Malaysia-India Digital Council and ongoing discussions on bilateral payment linkages between MPCI International Payments Limited and PayNet Malaysia. The Premier also highlighted the move that will allow tourists and businesses to make seamless, low-cost cross-border QR payments. In a significant move toward financial sovereignty, both leaders confirmed that Bank Negara Malaysia and the Reserve Bank of India are finalizing the framework for direct ringgit-rupee trade settlement. By reducing reliance on the US dollar, both countries aim to lower transaction costs and protect businesses from exchange rate volatility. Datuk Seri Anwar added that one remarkable feat is the decision to use local currency as far as possible for the ringgit and the rupee in bilateral trade and investment. With Malaysia accounting for roughly 13% of the global semiconductor testing and packaging market, the new agreements seek to marry India's chip design prowess with Malaysia's manufacturing scale. The leaders also welcomed the progress by Petronas and Gentari in India to strengthen semiconductor value chain cooperation and talent development. Now, the exchange of 11 documents reflects a comprehensive strategic pivot covering audiovisual co-production, disaster management, anti-corruption, and labor. Notably, Malaysia also supported India's request to open a consulate in Kota Kinabalu, Sabah, to support the growing demand for tourism and trade. As the region navigates global uncertainty, Anwar noted that Malaysia, in the ASEAN context, would benefit immensely if the region could secure more ways and opportunities to collaborate with India. Continuing with more economic news updates, Malaysia's inflation trajectory for the first quarter of 2026 is expected to remain largely contained, with economists predicting a benign environment driven primarily by seasonal demand rather than systemic cost pressures. Now, economists from Williams Business Consultancy and the Center for Market Education, CME, anticipate that the first quarter 26 figures will stay within a manageable range of 1.5 to 2%. Now, this follows a record low average headline inflation of 1.4% in 2025, the lowest since 2020. While the festive periods of Chinese New Year and Hari Raya traditionally spike consumer activity, market experts suggest these impulses are transitory. A key anchor for price stability in early 2026 is the strengthening Malaysian ringgit, which has helped keep import prices low. Now, economists argue that unless businesses choose to absorb these savings as profits, consumers should continue to benefit from lower costs for imported goods. Now, the strong ringgit keeps import prices low, and this should be passed on to consumers. If not, businesses are taking it in profits. That was noted by Jeffrey Williams, the founder of the Williams Business Consultancy. He added that cautious consumer sentiment might even lead to price discounting during festive sales, rather than the usual hikes. Now, while targeted assistance programs like the Sumbangan Asas Rahmah, the SARA program, and also the Resilient Labour Market provide households with higher disposable income, experts believe the inflation risk remains low as long as money supply growth is disciplined. Now, Carmelo Felito, the CEO from the Center for Market Education, CME, he said that these are relative price effects, not the drivers of sustained inflation. He also emphasized that unless demand-side impulses are validated by excessive monetary growth, their impact on the general price level will be limited and short-lived. Now, in its first meeting of the year on January 22nd, 2026, Bank Negara Malaysia maintained the OPR, or the overnight policy rate, at 2.75%. Analysts at TA Research suggest that any further policy recalibration will remain data dependent, as current conditions effectively balance growth support with price stability. Now, despite the optimistic outlook, some risk factors persist, including potential sharp corrections in the ringgit or external commodity price shocks. However, with global energy prices remaining soft and supply chains stabilized, the consensus points to a steady 2026, where inflation stays below its 30-year historical average of 2.3%. Now, we'll take a short break, but don't go away. We will return shortly after this with corporate news developments. And welcome back to the Midday Roundup. Let's continue with some corporate news updates. KJTS Group Berhad, also known as KJTS, is facing a significant recalibration of its growth outlook after the termination of its proposed 65.5 million ringgit acquisition of Malakoff Utility Sdn Berhad, MUSB. Now, the deal, which was first inked in February 2025, officially lapsed on February 3rd, 2026, after key conditions precedents or CPs were not met by the long stop date. In light of the collapsed deal, CIMB Securities Research has significantly revised its earnings estimates for KJTS. Now, the research house had previously factored in substantial contributions from MUSB, including high-margin engineering, procurement, construction and commissioning or EPCC upgrade works expected to commence in mid-2026. Now, following the removal of these anticipated revenue streams, CIMB has slashed its earnings per share or EPS forecast for the financial year 2026 to financial year 2028 by between 6.1 and 38.2%. Now, this downward revision reflects the loss of recurring operational income from MUSB's district cooling and electricity distribution business in KL Central, as well as the removal of 30 million ringgit to 40 million ringgit in projected EPCC refurbishment contracts. Furthermore, the company will no longer benefit from the anticipated economies of scale the acquisition would have provided. Now, MUSB is the exclusive provider of district cooling and electricity for the KL Central Transport Hub, supplying chilled water to 10 major buildings. Now, the acquisition was intended to be a cornerstone of KJTS's strategy to expand its cooling energy portfolio and strengthen its recurring income base under Malaysia's National Energy Transition Roadmap (NETR). Now, CIMB Research noted that at this juncture, we understand that 2 CPs were not fulfilled and that Malakoff does not intend to extend the CP timeline for this SPA. Now, the news has weighed heavily on KJTS's share price, which had already seen a 44.8% pullback in recent weeks as investors grew nervous about the deal's completion. Now, despite the setback, CIMB has maintained its buy call on KJTS, arguing that the recent price drop has already factored in the negative news and that the company's long-term growth prospects in the energy efficiency sector remain intact. Up next, we have some business updates. Maybank Investment Bank Research has maintained its buy recommendation on Capital A Berhad, raising its target price by 9% to 75 cents from 69 cents previously. The research house cited a series of strategic corporate exercises as key catalysts for the group's valuation rating. Following the successful disposal of its 5 airline businesses to AirAsia X on January 16th, Capital A has officially flipped its shareholders' equity to a positive position, a fundamental requirement for exiting Practice Note 17 or PN17 status. Now, while companies typically must demonstrate 2 consecutive quarters of profitability following such a turnaround, Maybank IB noted that Capital A could secure its official upliftment by May or June 2026. Now, the research house highlighted that Bursa Malaysia retains the authority to grant waivers regarding the profitability prerequisite for companies that showed strong earnings momentum prior to the equity turnaround. Now, even without a waiver, the group's current trajectory remains robust. Beyond the upliftment, Capital A is exploring an ambitious dual listing on the Hong Kong Stock Exchange to enhance global visibility and liquidity. In the long term, the group plans to unlock value by publicly listing its core subsidiaries Asia, as well as Asia Digital Engineering or ADE, is currently slated for a debut in the first half of 2027. Collectively, Capital A values its primary non-aviation arms, ADE, Teleport, Santan, and AirAsia Next, at approximately $3.5 billion US. Notably, its logistics arm, Teleport, recently secured $50 million US in fresh capital, valuing the unit at $500 million US. Maybank and IB stated that Capital A is expected to raise more capital, publicly list its subsidiaries, and dividend their shares in specie to shareholders. Now, the group is almost working on a plan to monetize its remaining 20% stake in AirAsia X, which includes shares and warrants. Now, current options being weighed include a gradual distribution to shareholders as retained profits accumulate, or a potential capital reduction to facilitate a special cash dividend. Now, with the aviation consolidation complete, Capital A is pivoting toward its future as a lean, tech-driven services group. As Tony Fernandez, CEO of Capital A, recently remarked during the completion of the regularization plan, the momentum is real for Capital A. We are now working towards the uplift and are truly excited to unlock all potential in our next journey. Finally, we're going to be wrapping it up with some major corporate developments and deals across Malaysia. Here are the headlines. At number 1, CIMB Group Holdings Berhad has deployed more than 4.2 billion ringgit within the Johor-Singapore Special Economic Zone to support customers and society through cross-border growth and SME expansion. The next headline, Affin Bank Berhad. They've appointed former Court of Appeal President Tan Sri Abang Iskandar Abang Hashim as an independent non-executive director, effective February 7th. The next headline at number 3 reads, WCT Holdings Berhad plans to establish a Sukuk Wakalah program of up to 5 billion ringgit, comprising senior Islamic medium-term notes and or subordinate perpetual Islamic notes. Up next, IRICA Corporation Berhad. They've secured a 125 million ringgit contract from Sarawak Land, Sdn Berhad, for the proposed construction of the Pinnacle Condominium at Jalan Tanjung Batu in Bintulu, Sarawak. Next headline at number 5, Midtown Group Berhad. They've accepted a 40.5 million ringgit contract from Exit Malaysia Sdn Berhad for the design and construction of main works for KUL22, a data center in Cyberjaya. Our headline at number 6, AWC Berhad. They've secured 3 projects in Malaysia and Singapore with a combined value of 26.6 million ringgit. And finally, the last headline, Matang Berhad. They've expanded its durian plantation footprint through the acquisition of 10 adjacent parcels of agricultural land in Tangkak, Johor, for approximately 18.2 million ringgit in cash. That is a wrap-up for the Midday Roundup with me, Wanizul, right here on KleverStock. Thank you so much for choosing us, investors. Hope you guys have a wonderful week ahead. It's only Monday, but next week is Chinese New Year, so get ready for that. Stay tuned for upcoming live stream programs. Have a wonderful day ahead.